Good afternoon and welcome to the end of day review for today. And today is February 8, 2024 and it's a Thursday. And one more day we close for this week. And this week is the week 6 for the year 2024. So 1 year we have 52 weeks right there. So the reason why they say 52 week high. That's one of the time mark right there. So basically today is barely move at all. It's just 22 cents. It's a 22 cent close above yesterday, right? Yesterday, Friday closed at 498.10, and today is closed 32, so about 22 cents right there. And the volume is significantly low. You see that only 46. Average is 77. It's 46, so very low for today. And the pre-market is also low. It's below 1 million. And that explains the reason why today is just a range day, right? It just goes to the range. Yeah, we identified the range right there. But remarkably, you see the level that it moving around at 497.86. 497.86. That's on the 4-hour time frame and 1-hour time frame. Yeah, the level of 497.86 is come from the 1-hour time frame, right? We treat it at a breakout level because we want a up close candle break above that and then retreat, pull back, and then it go up again, pull back, go up again. So very interesting to see how it's react to level tomorrow. Right there, here you have a 86, right? This 806 is equal high right there. Very interesting to see how it moves. That's where we get that level from. And for price action today, so because it's the huge move yesterday, so today the consolidation into a range did not surprise us at all, right? So actually, if we trade today, it's an easy trade today because we're not gonna get roll over, right? It will short them. We're not gonna get roll over. At the same time, if we long them, we're not gonna roll over. So for us, we need to identify on the consolidate day or range day. We have to trade from the range. If it fall up the range, we go long, and if above the range, we go short. To see how it's take care of the liquidity today is amazing. You see when it start up around 8:30, it get a really big move up, and it left behind a fair value gap right here. And then it open, right? You see that it opened above the breakout level of the 1-hour time frame right there. It opened above right there. So it gives a curve signal that it is over and above. But let's see. So we see that the liquidity were rate, it take the buy side, and the yesterday close right here, you see the yesterday close right there. So basically we mark the yesterday, the Wednesday close, and it opened just exactly. That's amazing. Today it's open exactly, Wednesday close. So it opened at 497.99. 9:30 is open 99. Yeah, 498.10, which is the close of Wednesday right there. So it opened exactly. That's the reason why today we have the gap equals 0. That's amazing right there. And we see the opportunity there, right? We're not gonna short. We're not gonna go long. If we see the gap, let it revisit, and it did. It take the sell side. But at the same time, if we go long from here, we will get, we see another sell side liquidity rate right there, but it not rate this sell side level right there. Wow, it's amazing right here. We just see something that we didn't see before during the trading day. So basically, it rate the sell side liquidity one more time, then this is a perfect to go long right here. You see it rated level, then it create, this is the breakout level. So this beautiful breakout level right here, we can either go long right here or we can go long right here. So we have two options to go long when we see this breakout level is created. This breakout level at 11.13 right here, 497.55 is it created when it tried to rate this sell side liquidity. So this is a very good breakout level right there, and it tried a couple of times to test it, right? It tests one time 12.05, second time at 12.55, like 15 minutes later, 50 later, and then it tests one more time at 13. Look at that, 13 hour, it jumped so high, and then it tried to retest but never reached that. So it gives us the entry level at this if we're looking for a long. Then our target gonna be 0.5 standard deviation or the DRI right there. So it's a perfect setup to go long. And also we see the fair value gap right here. It's retest that, and this is the order block right here also. This is an order block, or it can be a rejection block right there. So it go and retest it, rejection block. Exactly right there. So let's take a look at the screenshot we have. Yeah, so this is the setup that we observe, right? Let's see. And we annotate right here. So the best entry for it is 12.35 right there. So we have a setup. It's auto block, right? We treat this as auto block right there because it tests the breakout level at 497.55 right there. right? It's called auto block failure gap and retest, plus with the 4 breakout long, which is a 4 breakout right here. So if we treat this as a 4 breakout, then the entry for it is right here at 10, I think it's 12.55. We can enter right here, or exactly at 1. And we will target the, we target the sell side liquidity here at 498, or we target 0.5 standard deviation from the DR right there. But if we go right here at 4 breakout, then we have to stick through the pullback right here. We have to give up the gain right there. So I have to stick through this, to get to our targets. So that is the trade-off we have to do. Okay, look at the trade before that, right? The setup before that. So right here we have setup right there. So we have a 4 breakout, right? We put a buy stop above the buy stop, at this level when it's below right there. But we see that how beautiful this right here, right? It opened above that, but it go below to grab the sell side liquidity, and then next candle is open above that again, and then it retests. So it's a perfect setup to go long. But if we want a quick profit, then we just want 5 minutes. We get right there. Will be the DR, the implied DR high we get right there, and we can get a very quick right there. 1 to 4 risk to reward, 1 to 4 risk reward ratio right here. So it's a very beautiful set of quick trade right there, right? Because we see the rejection when it tests the first time, and here's the second time rejection. So it gives us a very very strong signal to go long. The challenge that we have to define a good target. If not, then when it pull back, we have to see through that. We don't move our stop loss. Okay, if we move stop loss, we will trail our stop loss, we will kick out the trade right away. You see, if we trail our stop loss, we get kicked out at this candle at 15 minutes later, right? We go in here, right? We got kicked out, we will trail our stop loss. So if we go in here, our stop loss still here, but if we want, we can move our stop loss to break even. We can get a break even trade. So we can move our stop loss right there. So that's the logic right there. And then it go and hit the 0.5 standard deviation right there. Yep. So that is the long trade, the first long trade, right? That's the long trade. We still have 1 to 4 risk to reward ratio, perfect right there. And the second long trade we have is built on top of that, right? So we know that this is breakout level that it will never touch again. So when it go down to close at that, we can trust this setup, which is auto block failure gap retest, because the failure gap and auto block sometimes it break, right? Sometimes it's breakthrough. But with the level that we identify for 4 breakout, it gets a reaction. It gives us a signal to go right here without concern that this auto block failure breakout retest will maybe have a breakthrough. But in this case, it's built on top of the 4 breakout long setup. That's which when we rate it at an A plus setup right there. Right before that, we have a 4 breakout, and it attempt or retest 3 times. It failed, and this time come down. It just retest the order block. It will not never break out. I mean, we not never, but if unlikely, we cannot say would 100%. There always a chance, and that's the fact that we are accepted when we do trading. Is always a chance. It cannot never 100%, but based on this setup, it gives a very high probability that it's gonna be go up, and our target gonna be 1.5, right? The DR high or the 1.5 again, and it did hit that target. You can see that, and we have a good risk reward ratio for this trade, also 1 to 5. So we have 2 long setup for today. So that's it for today. 2 long setup. By the way, we didn't take any trade today, or maybe tomorrow also. We just have the day off, and we just come back. We're not in the move to take the trade, so that's the fully disclosed right there. But we saw the 2 long setup right there, and which is right here. When it retests right here, it gives us an idea right there. And we have another setup right here. This setup is yesterday. We weren't available yesterday, but when we look back, we try to find out when the real breakout happened, right? That's our goal right there. We want to see how we try to fail breakout. Majority is going to be fail breakout, 70%. But at the same time, we want to take a look when 30% is going to real breakout. And we see the real breakout long setup right there. We have a breaker right here, right? Bullish breaker, break above, it left the fair value gap right there. So a strong signal right there, and it come back and retest that level. And just be patient right here, right? Let it form a doji. And we see the rejection to the outside. Then the next candle is open above that level. You see the doji form of 955 open above, and then it closed below. It's not the setup that it's gonna go long right there. And then the entry candle it open below. Then we can put a buy stop above that, and it will carry her into the rally. So we have a doji, you have entry candle, doji before that, right? And you have a Dow close, but they both, the Dow close is close below this level. That will, trap all the people who want to short right there. And this candle the same is open below that level, but as soon as it open below, boom, it got pushed back, and then it turned to raw right there. So it's completely, this is a real breakout right there. So we need to watch for the breakout level to see any fair value gap. Then it can give us some indicate that there's gonna be a real breakout, not full breakout. Yeah, let's process this pattern and put into our database or put them into our subconscious mind right there. Train our mind to see this. So next time we identify this, effortlessly, without much thinking at all. But sometimes we do trading, we do too much thinking, and it becomes a better analysis, right? Over analysis right there. We overthinking. So this is when we take practice, more practice. The more practice we have to achieve our goal that we just doing, right? Doing instead of thinking too much. But in order to get to that level, we need practice, and practice can help it to close the gap right there. So the perfect entry right here for us is at 10.05, right? And entry level candle we observe that's open below that. So as soon as we saw it open below, we put a buy stop above that, and it carried into the trade. And the target, we will target at the DRR high, even though it's not formed right there, but we can target right there. And you can see that it not retreat much, it continue to go up. So that's the real breakout right there. It's formed perfectly. You know, if we join our subconscious mind, see that, pick it up, then we are good to go right there. So we make sure that fair gap, you know, when it break out the breakout level, and it's gonna retest and watch how it react at that level and to the entry. So this is for, you know, the yesterday. So for today we had two long setup, right? One entry right here, target right here at the south side level right here, or at the implied DR, and then we have a non setup right here for long setup. That two, you know, beautiful setup, especially setup is A plus right there. It confluent between the 4 breakout this level and auto block fair gap at, you know, at this location right there. So let's see. What else we have? We have the very interesting is that it tried to create a, it tried to rate the buy celebrate at the almost at the end. You see that it make the new target high at the end, and you see the rejection right there, and you see you have a doji, and then it start fall off from there. So that can be a bearish signal for the next day right there. I mean, we can have a short setup right here, right? We can have a short setup right here, and our target gonna be the buy side of it right here. Yeah, the short setup right here, then this level, it's gonna be a 4 breakouts for short setup. Yeah, let's document this so we can have, we didn't have that document, so that's document right here, right? We trick is at a 4 breakout level right here. We see the doji right there, right? As soon as it open above that, we put a buy stop right here, or as soon as, you know, yeah, let's do that right here. So basically we have so this is sell liquidity right here, or yeah, we're sell liquidity right here, or the 1 point standard deviation right there. Yeah, let's put something right here real quick so we can wrap it up. So 1040. Okay, 1040. Let's remove this for now, right? Then how much we reach up here? Not much, yeah. That's a good setup. Boy, look, crooked. Yeah, I see. Then let's see how much we gonna get it. What the ritual is over here. Well, when it read right there. So yeah, 1, 2, 3. At least 1, 2, 3 ritual right there. So here's the salt tray, right? Yep. At 11. So it's a 4, right? 4 breakout. Short setup. And a sell stop at 498.02, which is this level right here. Right, because you have a auto block and you have a doji candle right there. Perfect. Right, you have a auto block plus doji. Above the breakout level. Breakout level right there. That's the perfect setup right there. That's the signal to set right there. So entry time gonna be 11:0 and targets gonna be 102 standard deviation of the DR rate or the cell size. So it's already at candle 1040 right there. So we target right here or this cell size liquidity. Either of them it hit, right? So that's an idea for it right there to go long. And the residual ratio is 1, 2, 3. That's the long setup for it. So basically right here, that web entry, and here's our breakout level. And we have a very good, reach reward, 1, 2, 3 right there. Hit it and get out. Yep. If we stay too long or slow, don't fail to access when hit target, we have to give them back and or get lost right there. We get roll over right there. So let's save this one, and this one is for breakout. So setup. Anti-term 11, right? It's February 08, 2024, and it's a Thursday. Yeah, so we have the short setup and 2 long setup. So three setup right there, beautiful right there. Okay, let's remove some of these. Let's get out of this business. We are hit our 30-minute mark. So let's look. Yeah, so in the 1 hour, 4 hour time frame, we see this kind of consolidate right there. Let's see how it moves. And oh man, here's on our daily time frame. You see the level right here, right? You can see the breakout level, or you can treat this a breaker, and you see the gap right there, huge gap. We're not gonna go long until it is retested. I think it's gonna retest the gap. That's what we believe. It could not. You see the last gap here, it never retest or close at all. It keeps jumping. So we never know, and we don't pretend to know anything, right? I mean everything. That's the beauty of trading right there. Embrace uncertainty and give up the control. Give up, the certainty. All right, that's it for today. Thank you for your time and interest. We are, grateful for this, and we are doing what we love. Then success is coming to our way. Bye for now.